Welcome to another edition of Bluespring Outloud. Really happy today because we've got some interesting topic to talk about. We're going to discuss the changing landscape of the RIA M&A and the future of Bluespring. We're going to kind of combine those and talk about it. But what I'm really excited about is the participants we have. First and foremost, to my left, Palaveev, the CEO and president of the Ensemble Practice, my former business partner, and I would say one of the gurus in the financial services space on wealth management and M&A. To his left, we've got Pradeep Jayaraman, and Pradeep has 10 years of running a fairly large M&A business. Also before that was, as he says, on the dark side in the investment banking and banking side of things, but it brings a wealth of knowledge. And today we're going to have an informal discussion on what's going on and what we've learned and where we see things going. But I'm not the guy who gets to run this. We're going to turn it over to Palaveev, who's going to run with the show.
I am going to run the show. That's awesome. I was going to say, Pradeep has 10 years of experience buying businesses. You have many years of experience building businesses, and I have 10 years of experience talking. So I think I'm exactly where I need to be.
Exactly.
This cast of characters is very interesting to talk to because you have such an amazing view of the industry. You really are in the catbird seat in the sense that you have a chance to meet tens, perhaps hundreds of advisory firms, and you have a chance to observe their behavior. You have a chance to see their successes, and perhaps you have a chance to see where they struggle. So that's what everybody wants to know. What's going on in the industry? What are the trends that you observe that entrepreneurs should be paying attention to?
Sure. I'm happy to start. And obviously, Stuart can jump in. I think the biggest trend in this industry is when I started in this industry, there's not much the RIA industry or the independent financial advisory industry was growing, but the wirehouses were still the big dominant force. I think what has happened over the 10 years, maybe because of me, is there is a significant shift to the independent space, right? Whether it's the hybrid space or the RIA space. And what you're also seeing is those independent businesses are getting bigger, right? A lot of it is just macro trends like the generational shift of wealth from boomers to millennials, advisors retiring and aging out and needing succession plans, but the movement out of the wirehouse into the independent space. And a lot of it is also happening because these firms have started thinking of themselves as businesses versus practices. Mm. And it's funny, right? Like when I started buying these businesses, $1 billion firm was considered, oh my God, this is a large firm. Today, $1 billion is just another milestone, right? Like you have many multi-billion-dollar wealth management businesses, whether they are on the hybrid side or on the RI side. The other big trend is just the increased levels of M&A activity, which is, I think, a big piece of what we are going to be talking about and what Bluespring does. And again, this is a very interesting phenomenon because suddenly private equity has awakened to the fact that these are amazing businesses predicated on client relationships, highly recurring cash flows. This is the kind of business like a good private equity firm should be investing its LP's money in. And you've seen a profusion of capital and a profusion of firms that are trying to get into the space. That's a little bit at the risk of rambling. I threw a lot. Maybe Stuart should have a chance to answer.
Yeah, I was gonna say, Stuart. So Pradeep sees the M&A side, but you and I've been there with you as well. You also see the entrepreneurial side, the act of building a business from the inside, the act of pouring heart and soul into creating something. Kind of what's happening? What are the trends that impact entrepreneurs? What are the internal trends rather than just the M&A activity and sort of the macro trends that we observe?
Yeah, it's a great question. I think what's happened in our industry, and Pradeep said it, is that these businesses have become more and more valuable. And the challenge has been, when I came in the business, it was you build a business, then you get to be 60, 65, you sell it to the next generation, you monetize, they run it, you go into retirement, and you get your long-term capital gains and your big check. Now, with these businesses becoming so valuable, the next gen can't afford it, as we all know. And now, as you said, even $1 billion business is the norm and then some. So they can't afford it, but they're still entrepreneurial and they want to be entrepreneurs. So what we've tried to do is say, how do we foster that entrepreneurialism or that entrepreneurialism? How do we incentivize them so they feel great and they see a great trajectory? How do we take advantage of the trends that these businesses, and you're right, they've gone from being practices to businesses, and continue to develop that next generation of talent while letting the entrepreneur who founded the business monetize it, continue on if they want to, do the things they love, but pass their skill set to the next generation.
There's one very important thing Stuart said, which makes a lot of sense, right? Like back in the day, you thought of retiring and you sold your business, right? Now, if you're doing that, you're probably not going to get the same value as if you think of finding a strategic partner as not just a financial transaction, but as another chapter in where you're taking the business to, right?
Yeah.
This is still largely a boutique industry. You built a successful $1 billion firm, maybe a $500 million firm, but to get to that next stage, to become a $5 billion firm, you need a strategic partner, right? And to me, that's what is really exciting about preserving and building the legacy. What we do at Bluespring is all centered around the entrepreneur. It's not about cashing chips off the table. Yes, the economics are important, but it's what we can do as partners with the entrepreneur.
That is a very interesting thought, because historically, equity transactions have been seen as a way of exiting the business. But Pradeep, you're emphasizing the role that very often equity transactions these days are a way of reinvesting in the business and writing the next chapter. Now, I'm Bulgarian, born and raised, and in Bulgaria, our love language is criticism. So we got to look at the challenges as well. Yes, we're very profitable. Yes, we're very successful, and valuations are high, and we'll talk about that. But if I could chime in, it seems like we struggle to grow as an industry, as a group of firms, as a community. We are not growing very well. Last year, because we do some surveys of the industry, last year the net new assets from new client relationships were only about 5.7%. And while that's not bad, that's nothing to write home about. That's not what, we celebrate.
Correct.
Can we continue growing like we used to? Can we find that vigor? Can we find that energy? Do we have growth ideas? We know we have capital, but do we have growth ideas?
That's a great point. I think I can answer it in a couple of ways, right? Like I think the first biggest challenge our industry faces is just a dearth of talent, right? Like you're only going to be as good as your next gen. Finding people is hard. Most of our boutique businesses do not have the luxury of the wirehouses with their massive training programs and then spending millions of dollars or hundreds of millions of dollars. So finding talent has increasingly become the challenge, right? And the way at Bluespring, this is something we take really, really seriously. Philip, you should know this. Like we have the Successor Academy, and it is all about getting this next gen and making sure they're developing into future leaders. And part of that future leaders is not just running the business, but handling client transitions and thinking about organic growth, right?
And I was going to say I do, because not only have we collaborated, because we teach classes in leadership and management, and we have graduated as many as 25, actually I think more than 25, over the last 10 years, more than 25 Bluespring G2s, which we tremendously appreciate, but also is a sign of your commitment to growing the next generation. The interesting thing was, I was at the University of Florida, and they have a CFP program there, and I was mingling with literally kids who are my daughter's age, who are thinking about becoming a financial advisor, and they were excited about that, which is very encouraging for the industry. But the great part of this was also Shane O'Hara was there from Provice Management Group, which is one of the Bluespring firms. So your firms are also already taking that initiative to be there at the grassroots, to be at the very beginning level, which is very encouraging. Historically, independents haven't had that luxury of investing so early in the process. They never had the money.
That's right.
But I would propose today independent firms are actually investing more in the next generation than just about anybody else. Which it's kind of interesting. Again, historically, founders have cashed out when they sold the business, but today we're asking them to reinvest in the business and actually continue growing it and building the next generation. Is that a point of view, Stuart, that Bluespring embraces? And is that the kind of buyer you are? What kind of buyers are out there?
Well, to just elaborate on the point you made, because it's a great point. We talk about this is about the changing landscape of the industry, and it has changed. It used to be, again, when I started, I'm the old guy here at the table, and say it used to be, you'd have to go catch your own fish, you'd smile, you'd dial, you'd cold call, whatever you had to do to get business. That's not the world we live in anymore. What we're working with our firms on is having the founders really transfer their skill set to the next generation, teach them not not how to just work with clients, but also how to fish, how to generate more business, how to grow the business, because this is a people business and we've got to teach them how to do that. Obviously, we're using the latest and greatest technology and online tools and social media and you name it. But if we don't teach that next generation, you can't be a planner if you don't have clients. I was always taught grow or perish.
Yeah.
So we got to keep focusing on growth. And that's, I think, where we're really putting our efforts and saying, let's show you how to grow. Let's grow with high quality clients. Let's get referrals. Let's build the business to professionals. And it's really working because it's teaching not just the next generation, like you said, but the kids coming out of University of Florida. It's our founders teaching their G2s, teaching their G3s, and working together as a team collaboratively, because you're not going to just cold call anymore. It doesn't work.
I think the other piece, so I think you touched upon a few great points, both of you. The other piece is like, as especially from an organic growth perspective, as firms look to get to this next chapter, and part of why a partner like Bluespring could be very attractive for them is almost institutionalized processes, right? Again, this goes back to scale and how you reinvest in the business. Yes, find the right G2, get the next talent, develop them. But if you build your firm as a process and data-driven firm, you are leaving all the over-engineering and thinking to the side and getting people to focusing on what they're good at, right? Like, to build a scalable business, in my mind, which can grow organically well, you need to have a very clear, articulated client value proposition. You need to have a very clear investment management, financial planning, client service offering process. And that's then you get into the training of the G2. They are trained in the way the firm is doing business. They're not all trying to reinvent the wheel. Those things were great in Stuart's time when people would just dial or like eat what you kill kind of an approach, when people just build their own practices and they sunk or they swam. But now we need to be more institutionalized and intentional about how we build these businesses. And this is again where a strategic partner like Bluespring can help get there, right? That's the reinvestment.
And we have the technology and tools to do it, which makes a difference. Yes.
Yep. So is that what creates value? Is that rewarded? Is growth rewarded? Is investment in the business rewarded? Or is it just build the profitable cash flow, cash cow, and then sell it to the highest bidder?
I mean, from a standpoint of view of what makes a business valuable, I think the number one driving factor, especially in these days when there's a lot of private equity money, it's a crowded space. Having high organic growth that's sustainable and repeatable in a scalable business model is what is going to get you, the seller, the most value, right? Like, to me, that's the most important thing.
So profitable, but also growing. Profitable is not enough.
Profitable is a two-edged sword. Like, too high of a margin means you're not investing enough in the business. Too low of a margin means you're not running your business well. It needs to be healthy and growing. And it's growing because you're investing in the business. And again, it goes back to you're investing in process and people and making it scalable. And that process needs to be repeatable, right? Like, the firm has built a process around organic growth, client service operations, and everybody is just following that process and then contributing to the overall achievement of the firm. That's what makes a firm valuable.
It's also, and if it were just about profitability, why would someone want to stay in the business? I mean, I got in this industry because I love helping people. I cared about my clients. I care about my employees. I care about my legacy. And if it was just about money, and that wouldn't motivate. I think for this next generation, especially what we see, we talk about changing the landscape, is they want purpose. They want mission. They want to get results. They obviously want to make money and they want to do the right thing by people. So we've got to make this fun and enjoyable, but also use the tools that Pradeep's talking about.
I mean, the most profitable business I've seen is $1 billion business with 100 relationships with one advisor. That's not a sustainable business. That's not a monetizable business, right? That's just a person with like really good client relationships as a great financial advisor.
I was going to say the highest profit margin I've ever seen was my daughter's lemonade stand, but it's not particularly scalable. That was the problem. So we're describing an approach and perhaps a philosophy to business, philosophy that balances growth and investment and reinvestment, philosophy that balances the three constituencies: the investment, the investors in the business, the team, and of course the clients. It seems to describe the philosophy of Bluespring, but is that like my grandma used to say, there are passengers for every train. So where the train is going, what sort of acquirers are we working with? You seem to be the entrepreneurial reinvesting type.
Yeah.
What are other types are out there?
Yeah.
What's the landscape at the train station?
So largely I would say there are two bookends, right?
Mhm.
There are these great integrator models wherein the advisor really doesn't matter. What matters is the client relationships, and they're just plugged into this large system,
Mhm.
which in some cases works really well. But there is no identity to the advisor or the business that is selling to this integrator.
Sort of a franchising kind of thing. Just
Correct.
join the franchise
Yeah.
and mollo yourself after.
Correct. It's like Starbucks. Like that's the best example
Yeah.
I can think of, right?
Yeah, they bought
Yeah.
Pete's Coffee, rebranded it.
Yeah, exactly. The other way is just people who have some capital, represent a financial transaction, and are aggregating a bunch of cash flows, right? Like they're great. You're getting some exit value for your business, but you're not really getting a strategic partner. What you're getting is a financial partner, which is great, but that's not, again, really helpful in getting a firm from $1 billion to $5 billion. Where Bluespring sits is we want to get your business to a place where it is today at $1 billion, get it to a $5 billion in the right way, not at the cost of, not everything is not sacrificed for the EBITDA margin. It has to be profitable, but it needs to grow in the right way. And there is a tremendous focus on organic growth and reinvesting in the business, especially in talent, especially in the G2s and G3s. But the entrepreneur is at the center of it, right? Like we are not assuming the identity of the advisor. We are not saying this is how you do things, you just plug into it. We love what you built, how you built your business. We want to amplify your efforts, and this is the vision. We want to help you execute that vision. And we see shared economic, cultural, strategic alignment in building towards that.
And to put it in historical context, because I was part of the team that formed Bluespring, we spent the better part of a year interviewing founders and successors of firms. And what you said is exactly right. We found that there's an issue here. The next generation can't afford to buy these businesses that are so valuable, but they want to be entrepreneurs. And quite frankly, as an entrepreneur myself who sold my company at 50, I feel like it's very hard to tell an entrepreneur to put on a blue suit and a red tie and a white shirt and march to the drum. We're entrepreneurs. We're creative. We love to get out there and do new things and create and make a difference and make things happen. So the Bluespring model was designed with how do we preserve that secret sauce? How do we help put these entrepreneurs on legal steroids and help them grow?
Yeah.
And how do we continue to have fun and build something great? And I think it's made a difference. But I also would say the one thesis that we had wrong when we started this was I thought when we started this thing, we'd be buying a bunch of 60, 65-year-old guys and women. Because if you look at the aging demographics, but what we've seen, Pradeep, as you know, is our average acquisition is probably about 50 years old. And that's not because they're getting out. It's because they see the benefit of merging with an institutional investor and growing it together. And that's
100%.
Very interesting because you mentioned institutional investors, and I think the three of us have some experience. Some wealth management companies, after successful acquisition track record, went public. It didn't seem the public market had a ton of love for wealth management, but it certainly seems like private equity does. It almost seems like private equity may be the better investor for this business model rather than
it's the classic private tech, like the way this is my opinion. But it's the classic attractive investment for a private equity, right? Highly visible cash flows. Again, especially for the largely fee-based businesses. In some of them, like most of our firms in our industry charge in advance. So you know your quarterly earnings a quarter before. That's fantastic, right? And it's repeatable. It's not volatile because most good advisors are not selling performance. They are selling peace of mind for their client. They're the center of their client's financial life. And those client relationships are extremely strong. And any of us who's worked with advisors, so successful advisors, know that the number one asset that they're ultimately buying is that goodwill that the advisor has with the client. That's not going anywhere. What's not to like? And it's a fairly simple business otherwise, right? Like once you have the client relationships, you're charging them basis points on assets. You're not really paid for performance. You're paid for being the trusted financial advisor. That client is not going anywhere. And then the rest of the business is fairly simple to understand. It's all about people. And it's really all about people, and how good the people are determines how good you are. That's a very from a private equity standpoint, you can't get more attractive business models than this.
It's interesting you mentioned Harry, for allow me Stuart for a moment, because I think that may be part of the problem. Is I think the CFA types that analyze investments, the MBA types that create corporations. If I can oversimplify, which it always means you're wrong, but I will risk that because why not? I run my mouth a lot. I think those are the types that fall in love with their spreadsheets a little more than they trust people. They prefer to trust the formulas than they trust people. And you said this business is all about people, which is like, Stuart, how can you manage entrepreneurs? How can you lead entrepreneurs? They are notoriously difficult to control. They're uncontrollable, unemployable. They're full of ideas and energy. How can you steer that energy? Can Bluespring do that?
Well, I would say we don't try to steer it. We try to partner with them. I mean, our model is all about, you're not going to be, as I say, you're not becoming the employee. You're going to become our partner. We're going to show synergies. We're going to bring value added. We're going to bring in the consulting and the value added tools that can help you grow faster. And I think that's what we try to do. We're also incredibly selective. We're looking for the right firms that we can partner with that fit us culturally, because it's like a marriage. We're going to be in bed together or be working together for years to come. And we want to really enjoy each other's company. But I did want to jump on one thing Pradeep said, because the private equity thing was interesting to me as an entrepreneur. I'm shocked that it has such a bad rep out there. And I kind of dug into that myself, because I can say as an entrepreneur, as I said, my perception was build the business, sell it, get your long-term gains. I sold my first company at 50 and I've now since then had 5 different private equity firms. And what I've learned is it's the gift that keeps on giving. It allows that not just my generation of founders, but successors to share in the equity side early, but also have monetization events throughout their entire career. Typically, every 3 to 7 years, there's some sort of event that occurs with private equity. And if you do what we do, which is we invest in we bring private equity partners who are letting us do what we do well. They're providing the capital, but we're running the business and growing it. So with that, and they're all about growth, not about cutting expenses. So with that, what I've seen is every 3 to 5 years, you have a chance. Do I want to put more in? Do I want to take some out? Do I let it ride? And so we've seen a lot of our partners create a lot of wealth at younger ages, but also the older partners stay around because they still can be entrepreneurs. They're just owning part of something a lot bigger by partnering with private equity.
I want to go back to the first part of your question, like how do you work with entrepreneurs? So look, to me, that's the most exciting part of this job. Right? That's why I'm really passionate about this industry, because this industry is largely we call it boutique cottage, but it's primarily entrepreneur driven. They have created this independent financial advisory industry. And to me, it's not about steering them in any direction. It's about creating an open dialogue. Just because I come with a check and buy this business doesn't mean I have any credibility with them, right? I always strive, just as Philip, you're probably doing it every time you're out there coaching advisors. That's what I do, right? Like I want to build credibility. What helps is we spend a lot of time understanding, meeting the people, not just the top leaders, but everybody at the firm before we even acquire it. So we have a very good sense of where there are shared alignment points. And again, being selective really helps. And then once we get the transaction done, that's not the end of it. That's when the real work starts. We're always striving to establish our credibility, showing that we can add value. All I ask, whenever some prospect asks, what does it mean? All you have to do is keep an open mind. I'll come to you with ideas. We can debate, discuss, disagree. And ultimately, we need to have some shared vision that we both agree on, and then we go and execute it, right? Once you establish that, it's a self-selecting model. People who say, like, don't bother, I just want to check, probably they're not good fits for us, right? Like, so that's how we are able to work with entrepreneurs. And we are also obviously able to create a lot of shared strategic and cultural alignment.
It also aligns one thing. It aligns that we're in a business where with all these entrepreneurs, we're all reinventing the wheel. 10 different firms in the same market can do 10 different things or do it the same. They keep just repeating each other, but reinventing it themselves. By bringing them together, we're building an inventory, a library of best practices and trying to save time so they can, again, continue to grow and do those fun things. And I think that makes a difference.
Communities learn from each other. And that's something that we have observed so many times and benefited from. You both emphasize how selective you are. I'm kind of curious, what are some of your favorite questions? Perhaps questions that are not so obvious. You know, everybody asks, like, what's your vision and what's your strategy and value proposition? What does your P&L look like? But what is a favorite question of yours that perhaps is...
Favorite question question I get asked by prospects?
No, a favorite question that you ask to establish if they are a good fit, that perhaps is not as obvious.
I think for me, the first question always, and maybe this is not like really a unique question, is like, why are you considering a partnership and what do you want in a strategic partner? To me, those are the first questions because that informs a lot of what I'm looking for, right? In a good partner for ultimately Bluespring to partner with.
Yeah. Wonderful. And I would elaborate, say the same thing. I think it's what's really important to you. If we're sitting here 3 years from now looking back, what would have had to have happened so you feel really good about where you are, where we are now, where we're going, et cetera? Because our goal isn't to buy, it's not a house. You don't sell it and then move out. Our goal is to invest in your business, partner with you and your next generation of leaders and grow this. So we need to know what makes you tick, what makes your next generation tick, what's going to give you career satisfaction, and what's going to keep you here, keep you in the seat growing, or what parts of the job do you like so we can position it so you can focus your time doing that.
Fantastic. It's really interesting. My one of my many mentors, and Stuart, I think you have worn that hat as well because I've learned so much from you. But one of my many mentors used to say that his favorite question was to ask the founders, if you were to pass away suddenly, somehow, who in the firm would you like to manage the money for your family? Who would be the people managing the money for your family? And interestingly enough, back in those days, those were the bad old days. Many entrepreneurs said, "Oh no, I don't want anybody here." That was the clearest sign that there is no next generation present here.
That's a great question.
Speaking of the next generation, if I can just kind of go there, and then I have one more important question that everybody wants to ask about valuations, but I'm going to leave that for last. We talked a lot about the entrepreneurship of the founders, the people who created this cadre, because it is a community, a cadre, a wave of independence. And that wave of independence became a tsunami that grew market share tremendously based on that power of entrepreneurship. But the next generation are frequently accused of not being entrepreneurs. As a matter of fact, I frequently quote, I think it was John Quincy Adams, who said that we will be soldiers so that our sons can be farmers, so that their sons can be poets. So are we working with a generation of farmers or are we working with a generation of poets? And where are the entrepreneurs? Do we see enough of them in the G2?
So I think at least in the firms that we have, and also like frankly in the market, again, this is where the selectiveness comes. There are great G2s and G3s. I think there are processes and methods that make them into great entrepreneurs. Obviously, they're never going to have the same cachet as an entrepreneur as a G1. But look, ultimately, if an entrepreneur, a G1 has built a good business, he or she would need somebody to carry on with the legacy. And some of them have been able to figure it out. Bluespring has certainly helped and invested a lot in these businesses to make the G2s and G3s entrepreneurs. And just because somebody didn't set up a business sitting in a garage and thinking of a business idea doesn't mean they can't take the business to greater heights and greater scale, right? Ultimately, they need to be of a growth mindset. They need to be open to new ideas. They need to be willing to change, and they need to be willing to invest time and effort in following and executing on that vision. Right? To me, that's the most important thing.
Wonderful. And I think your word is a really good one, entrepreneurs. That's how we look at it, because it was one thing to start as an entrepreneur where we could put a lot of sweat equity in. Right now, these businesses require too much capital to buy them or to just launch them from nothing. So I think the entrepreneur has the best of all worlds. So we're seeing a lot of that young talent, but we're looking for it and saying you're an entrepreneur, which means we've got the capital, we can give you the training, but we still need you to ultimately be accountable. The buck stops with you, and you have to think and eat and breathe. How do I grow this thing? How do I grow my employees? How do I make my clients happy? And how do I create real value at the user, at the client level?
Yeah, and I in my own experience, that's a very difficult transition from. I think many people, myself included, probably you kind of grow in your career believing that your success is a function of your efforts. And then you realize that this is a team sport, that you need a team and you need an entire organization, and building that organization is part of your job. Surrounding yourself with high quality teammates, training, developing them, being their leader if necessary, is part of being successful. So we mentioned many times that it's becoming more difficult. I wouldn't say impossible, but more difficult for the next generation to buy equity. And they're trying to buy, they're trying to borrow, they're sometimes risk averse. It's not very easy. What is happening with valuations? Where are valuations going? And what is your forecast for the weather?
Okay.
Not the weather, but
So anything I say here will be held against me, so I need to be careful with my words. But look, valuations are healthy. I think for all the reasons we mentioned, the macro trends, the attraction of private equity to the space, valuations are healthy. I think what trend that I'm seeing is buyers are becoming more discerning. Again, it goes back. It's not enough that you had just a big business. People are looking for a lot of things in high quality businesses that get the top valuation, organic growth, the sustainability of the organic growth, the scale of the business, and the scalability of the business. I would say these are the four factors. And the fifth one, which has always been the case, is the quality of the people, right? Like I would say these are the top factors determining valuations. There's more of a differential between firms that meet all these five criteria versus firms that somewhere fail or fall short. That wasn't the case before in the wild west days when suddenly like every asset was high. Having said that, valuations are really high, right? Like this is a very attractive business to be invested in.
Yeah.
Stuart, your take?
I echo your thoughts. It's about quality because I think when we first launched Bluespring, what we saw is some of our competitors were just buying any firm that could fog a mirror, and they call that growth. Growth can't just be writing a check. It's got to be both organic and inorganic, and it's got to be high quality, high integrity, and client centered. But what we're seeing right now, this is an amazing business. I have friends who have sold companies in all different spaces. This is one of the most valuable, most high multiple spaces, which is incredible. So if you've built a quality business, this is the place to be marketed. This is the industry to be in. But you've got to check the boxes, I think that Pradeep said, because people think, well, I think one of the most interesting things is when we talk to a firm and say, well, how's your growth been? Oh, I've grown 10% a year. And then when we do an asset walk and dig, and it's the market that's grown 10% a year. Yep. You've got to make sure you're focused on growth. You develop the next line of talent. You've created an ensemble. So if someone gets hit by a bust, the thing's going on. And you've built a true firm that's client-centered. But I think if you do that, these firms are going to continue on. I think the valuations are going to continue at a very high level. And I think that a lot of people are going to make a lot of money, but make a big difference, which is nice.
That's awesome. And in closing, I'll say when I bought my house, and it's still my house, I still live there. I've only owned one house in my entire life, I for some reason. But I asked the realtor at the time, and this was 2005 when the market seemed crazy and valuations seemed impulsively high. And so I bought this house and I asked the realtor, oh my God, the price is so scary. How do I maintain the value of this house? And he said, his name is John, and he's an amazing realtor and a very good friend. We used to play volleyball together. And he said, look, Philip, this is most of all your home. Just maintain a good home. And if the roof is leaking, fix it. And if the front lawn needs mowing, mow it. And maintain a good home and we'll always have good value. And he was right. I think the house these days is about 3 times what it was worth. And at the time, it felt impossible. How would I ever afford to buy it? Thank God I did. So thank God we're still investing in these businesses and they seem to be tremendously successful. Thank you for inviting me here to run my mouth. So I appreciate that too. Thank you.
Thank you.
Yes, thanks for doing this. And thank you all for attending this wonderful episode of Bluespring Out Loud. Look for more of these episodes coming because we keep them coming out. We want to keep timely and relevant. The industry's changing. We're all growing. Let's share together. Thanks.